My next guest, that's going to be Taylor McKenna, analyst at Copernic Global Investors. Welcome to the show, Taylor.
Hi, Tom.
Great
to be here. Thanks for having me.
Oh, yeah, you got it. Tesla, we got to talk earnings. Tesla, this was, I think the bar was relatively low going into this report. A lot of good commentary out of Elon Musk on that conference call. What was your takeaway from the earnings that we saw from Tesla?
My takeaway is that Tesla continues to grow. EVs continue to grow overall. Of course, the demand will go up and down over time, but clearly they're taking share. Even if some in the market are thinking that the growth will be slowed, we see a bright future for Tesla. It could be overvalued at today's prices. We're value investors, so we're paying much more attention to the critical minerals that go into Tesla that are trading well below their incentive prices. I can get more into details on those later on.
Yeah, let's hit on that before we get into that lithium discussion. Is the fact that when you look at this, a lot of people are valuing this company on a basis that, hey, tech moving forward and the innovation that they're doing, whether it's humanoid robots, whether it's the cyber cab, that it should justify that valuation that it has. But then if you look at compared to OEMs in the legacy automaker space, it's overvalued quite a bit. I mean, what's your take here? Who's going to be right? Because you know what? He can pull a rabbit out of his hat, and he continues to do that over his career at Tesla.
That's certainly true. And we have a lot of respect for Elon Musk and all his endeavors that he's been so successful at over time. But again, at Copernic, we pay attention to valuation, and it seems stretched at this time to us. What's also interesting is all of the future projects in which he talks about requires a lot of energy, right? So whether it be data centers, AI, again, all of these require a lot of critical minerals, and these critical minerals are trading very cheaply right now.
Yeah, they're trading cheaply. Now, we've seen this nuclear boom start to take hold here as AI is going to require a lot more energy at this point. When you look at lithium, I mean, and some of these other metals that and energy sources, if pricing's low at this point, we saw margins increase for Tesla. Is that a benefit for this industry? Because we've seen a lull in EV sales compared to maybe hybrids.
That's certainly true. And if inputs are low, then it is a benefit for the OEMs. But what's important for them to think about, too, and important for all your investors to think about, that if EV demand is going to grow over time, which we think it likely continues to, then you need these critical minerals. And you need to incentivize these producers to build new mines to supply these critical minerals. So it's likely that prices for lithium in particular need to be much higher in the future to incentivize this growth that the car companies want. So it's almost like a chicken and egg. Yes, they like low prices for lithium, but they also like slightly higher prices, so they make sure that they have the supply that they need.
Yeah, and if you look at some of the names within the space, whether it's LAD or SQM, SQM's underperforming. LAD's having a nice run here. When you look at individual names within this industry, what sticks out to you there?
Sure. So at Copernic, we pay really attention to, as I mentioned, incentive prices, and prices for lithium are around $10,000 per ton right now. We think you need 15 to 20,000 to incentivize new production. However, what's also really great is you can buy some of the best lithium companies in the world at a discount today. And as you mentioned, that's SQM. They have arguably the best assets in the world in South America with their brine assets with very high-grade lithium and a very unique extraction technique. So we're very enthusiastic about SQM at this prices. And for sure, this stock is not pricing in higher lithium prices in the future at the moment. So we're happy to partake in an investment in this company right now. There's also other companies. It's been interesting to see what's happened with Arcadium and the Rio Tinto deal. That certainly created a lot of excitement in Argentina, as well as the change in government.
Yeah, SQM down 33% so far this year. What kind of impact here, Taylor, does finding new sources of lithium? I just read recently that down in Arkansas they found a huge deposit there. Is that also weighing on prices at this point as mining expands for a lot of these metals?
It could be, and that's also a very interesting publication that USGS just put out, I think, a few days ago. What's key, though, is this is a technique called direct lithium extraction. Instead of letting the brines or the fluids evaporate first, like SQM does, you actually extract the lithium directly from the brines. These are much lower grade brines than that are down in South America overall. And the technology is unproven, and the technology is likely to be very high cost. So while it's likely DLE in some shape or form in Arkansas and Texas is part of the future for the lithium demand, it's unclear how that happens. So again, circling back to SQM, we're buying a known company, a known producer at a discount right now. So we'll focus on that. But of course, we're watching the industry as well.
Yeah, SQM, as I mentioned, underperforming. You like that one. When you look at the EV industry as a whole moving forward, they're going to require more lithium as more people get on board. We've seen that lull in sales, but expected to pick up. If you listen to Elon Musk, it's going to pick up pretty significantly, 20 to 30% of sales for Tesla next year. But other sources here, I keep on hearing rumblings about maybe hydrogen engines becoming more popular, offsetting maybe some of the EVs and the battery required there. What's the outlook for this industry as China continues to spit out cheaper versions of what other competitors might have, where there might be a changing in the guard, or is the EV battery, lithium ion batteries, that's going to be the future here for this industry?
Well, it's hard to say, and of course, hydrogen fuel cells are an exciting technology and something that we'll be watching going forward. But they, as you know, they still don't have a place in the marketplace, and they're largely unproven. Whereas we know EVs work, and we know EVs will likely grow into the future. You mentioned other sources of demand. I think actually what's interesting is hybrids and plug-in hybrids likely have a very bright future as well. They're going to be part of the mix in our belief here at Copernic. And some of the critical minerals that supply these plug-in hybrids and hybrids like platinum group metals are also very much on sale, and you can buy them well below incentive prices. So again, we're happy to partake in that. As everyone is so excited about the EV revolution, we think hybrids have a future as well.
Yeah, hybrid sales have been rocketing, and some of the Japanese automakers, Toyota and Honda, didn't invest as much into EVs, and their hybrid sales exploded. So we'll continue to watch that story. Great breakdown for us, Taylor. Have a great day.
Thanks, Tom, for having me.
All right, that's Taylor McKenna, analyst at Copernic Global Investors.